Good morning and welcome to Breakaway Funding's April Investor Roundtable. Thank you for coming. This is Kim Castiglionis, the founder and managing partner of Breakaway Funding LLC and the former CEO of Circle Bank, a successful franchise built upon trust and collaborative partnerships with our community. At Breakaway Funding, we are spearheading an innovative platform that brings the same commitment to a new and thriving online investing community we call Community Capital Marketplace. The engagement of all members of our communities, investors, business owners, entrepreneurs, and community financial institutions collaborating to ensure capital is made available to propel innovation, job creation, and to provide new opportunities for investors like you. Our platform is a complete capital raising and investing ecosystem providing a standardized process for raising capital, leveraging technology to help drive down the cost for issuers, a comprehensive and transparent due diligence documentation system, and analysis tools to help you make informed investment decisions through a secure, convenient, and regulatory compliant website. Now, we believe that everyone should have access and the ability to invest in startups and early stage companies they believe in, and in which they are legally eligible to invest. To help prepare you for and participate in this exciting new marketplace, we provide a full complement of services and support from free educational webinars to post-raise investor relations care. But education and analytical tools are only part of the investing equation. The other part, and equally important element, are the people in whom you will invest and in whom you entrust your financial resources. These investor roundtables, or pitch parties as we like to call them, are not only about investment opportunities, but about meeting and connecting with the entrepreneurs raising capital, the very people you will be investing in. As we begin today, we encourage you to ask questions of our presenters. To ask a question, please use the control panel in the right-hand side of your screen. David Perticone, Communications Manager at Breakaway Funding, will take your questions in the order received, and we will get to as many of your questions as time permits. Now, since private equity investing is governed under the Securities and Exchange laws, we have to cover a few things. First, our disclaimer. I am not a licensed investment advisor. My role here is to facilitate the meeting and interchange between you and the entrepreneurs. Please do not construe anything said today as an endorsement, assurance, tip, hint, or guarantee. There is extensive information available on our portal for this and other opportunities. We anticipate you will complete your own due diligence before choosing to invest. Like many forms of investing, there are risks, some quite unique to private equity investing. There are no guarantees of return. All or part of your investment could be lost. These securities are not readily tradable or saleable. Please check each offering for specifics about transferability and sale. Now, due diligence is an important aspect of any informed decision-making process. That is why, at Breakaway, we view due diligence through the lens of community bankers. We want to make sure you have access to a complete and robust set of documents which will help you analyze risk and reward. Additionally, we have embedded an interactive financial modeling tool in each offering so that you may alter the company's financial planned assumptions to see how your changes affect the company's financial outcome. As a side note, our education webinar next week, entitled The 1 Hour Banker, will walk you through how to use this financial tool. At this time, I'd like to introduce to you our broker-dealer, Philip Wright. Philip is going to talk briefly about the role of the broker-dealer, the regulations governing crowdfund and private equity investing, and who can invest. Philip is the founder and CEO of Broker Bank Securities, Inc. and Crowdfunded Securities, Inc., which he has operated for the past 12 years. Philip, it's been a while, but it's great to have you with us today.
Thanks, Kim. Good morning, everybody. Good afternoon, wherever you are. I've had a FINRA broker-dealer firm for a while, as Kim said, and with respect to crowdfunding, we're all taking advantage of what's called a 506C Title II exemption. And where that's useful and innovative is that it's a way to advertise and reach out to people that would like to invest but maybe haven't been able to. One of the things, though, about this is you've got to be an accredited investor and be able to rep and warrant or prove with an independent party that you are able to be invest in this type of thing and afford the loss if that happens. On the other side, it could be a very great return. We don't know, but that's one of the safety features in these types of offerings. So as a broker-dealer, I'm involved in working just as part of the team for I do quite a few things. Of course, I've dealt with different types of securities, so I've been trying to help Breakaway and Jackpot Spirits have the right type of security for where they are at this point in their evolution. And then when you do an offering like this, your funds, we don't touch the funds. We go into an escrow, and the escrow agreement is signed off by the bank, the company, and the broker-dealer. And the bank always will insist with this type of offering that you have a FINRA registered broker-dealer, because we have to go through some due diligence that other people don't normally do. We also go look at the offering, the background of it, the actual note, the subscription agreement, and that things are properly filled out. And we just try to help facilitate the back end so that we can get this done as smooth as possible. And then we assist the issuer with their Form D you have to file a Form D with the SEC when you do an offering an initial. And then finally, there's a lot of regulation and there's a lot of controls in this to protect you, the investor. And I think you'll find this a very good experience, Breakaway and Jackpot Spirits, because of all these controls that are there to protect you, as well as bring you a good investment. So with that, I'll pass. Thank you, Kim. You can take over.
Thank you, Philip. So as Philip mentioned, we do a lot to help support issuers prepare for and execute capital raises in compliance with the Securities and Exchange laws. I just would like to note that the offering being made available today or through Jackpot Spirits is under the Regulation D506B, which means that up to 35 unaccredited investors will be invited to participate in this exciting offering. So speaking of Jackpot, let's move on to our featured investment opportunity. It gives me great pleasure to introduce two of the team at Jackpot Spirits, a company whose tagline is, "Every bottle's a winner." First, the founder and CEO, Mark Fiorito. Mark has worked in the adult beverage industry for close to 25 years, most notably as one of Whitehall Lane's winery national sales managers. In this capacity, Mark managed wholesale distribution throughout the United States, as well as direct sales for the winery. As president of Jackpot, Mark brings to the company strong wholesale and retail relationships to help with the sales and marketing of the Jackpot Spirits vodka. Next, we have Paul Hoffman, Chief Financial Officer. Paul's professional career began in public accounting with Labenthal and Horwath, San Francisco audit team, moving later to Moss Adams of San Francisco. In 1986, Paul Hoffman moved to the Napa Valley to work in senior financial management positions, including Rutherford Hill, the Hess Collection, and Kendall Jackson. Seeing a need for strategic planning and support for the smaller wineries of the Sonoma, Napa area, Paul launched the Hoffman Group in 2000, which has become a highly successful advisory team directing and supporting business in the alcohol beverage industry. Mark and Paul, we are very excited to hear what you have to say today, so the floor is yours.
Hello, everyone. My name is Mark Fiorito, and I'm the founder and president of Jackpot Spirits. And I'd like to thank everyone for joining me and our CFO, Paul Hoffman, today, along with the team at Breakaway Funding. Thank you, Kim, for having us. Our company has launched an exciting, game-changing product, Jackpot Premium Vodka, with a resort credit highlighted on our bottles that may be redeemed at our partnering casinos' premises. This is a huge opportunity for all of us. Two of the largest niche markets in the country are the gaming and adult beverage industries. And our marketing opportunity really marries these two together. Jackpot is a high-end spirit with a $25 promotional credit on each bottle being offered by our launch partner, the Palms Casino and Resort in Las Vegas. We have multiple revenue streams that are fourfold: bottle sales, casino partner fees, licensing fees, and third-party advertising. We also have protected intellectual property, as our mechanism is patent pending, with a first-to-market advantage over all of our competitors. Our management team includes myself, with over 20 years in the adult beverage industry on the wholesale distribution side, most of which was spent working for the Leonardini family, owners of Whitehall Lane Winery. Scott Schiller, a partner, is a fifth-generation distiller. He's the former general manager of Hangar One, located in Alameda, who currently manages 4 distilleries and 9 other brands. And Paul Hoffman, our CFO, who's with us today. Paul has over 25 years in the adult beverage industry. He's the former corporate controller of Kendall Jackson Family Wines and the former CFO of the Hess Collection Winery. Paul is the current strategic advisor to 5 top-performing wineries in the North Coast wine region. Our market for the launch is adult beverages in the adult vodka category and Las Vegas. The adult beverage industry is over $100 billion a year in sales, reaching out to 200 million consumers. Within this category, spirits make up $22 billion. The vodka category is the largest segment with $5 billion in sales, as well as having 33% of the cases sold by volume. Las Vegas now has close to 40 million visitors annually, with 90% of them being over the age of 21, the legal age to drink alcohol. What's impressive is that 55% of the people come from the western states, and over 25% of them come from the Tri-Valley market of Los Angeles, Orange, and San Diego counties. As of 2013, 71% of these people gamble while visiting. We have a 3-pronged business model in place. We're a promotions vehicle. Every Jackpot bottle features a redemption code that can be used for free play on the casino floor, entertainment, lodging, and food and beverages. As a technology platform, every bottle contains a unique redemption code that is redeemable at our website, jackpotvodka.com. And as an ultra-premium spirits company, Jackpot Vodka is custom distilled, triple filtered, and is a corn-based, gluten-free spirit with a target shelf price of $24.99. We also have a 3-tiered distribution model. For our consumers, the perceived potential of winning is worth far more than the face value, as well as substantially discounting the suggested retail price. For the retailers, the purchase is heavily discounted, incentivizing sales with promotional tie-ins, equaling additional sales. And for our partnering casino resorts, Jackpot provides extended reach into the target demographic with an attractive visitor acquisition cost. I like to call this marketing on steroids. Our marketing strategy has authorized us to operate in 4 states: Arizona, California, Florida, and Nevada. And we're also now working with the state of Pennsylvania to sell in their state-run liquor stores. So how Jackpot works is that the consumer purchases a bottle at the retail store. They register their unique code at our redemption website, jackpotvodka.com, and then they may redeem their rewards at the casino resort, using them for anything, whether on the casino floor, restaurant, or towards their hotel room. Our strategic beta casino relationship has been executed with the Palms Casino Resort in Las Vegas and have the approval secured with the Nevada Gaming Board. Our competition as a promotions vehicle is compelling. We have no direct competition. As a spirit, there are other luxury vodkas, but we have the lead time on development and a pending patent to create a barrier to entry. And only Jackpot has been approved by the BATF's Liquor Division, the Federal Tax and Trade Bureau, also known as the TTB. At this time, I'd like to introduce you all to our CFO, Paul Hoffman. Paul will go over our pro forma financials, as well as our use of proceeds. Paul?
Thank you, Mark. We've modeled out some projected financial results for capital investments of between $600,000 and $1.5 million. I'd like to present the highlights of the $1.5 million model, assuming we're successful with this capital campaign. So starting at the top, cases sold will be the primary revenue driver. We've projected about 3,600 cases to be sold this year in 2015, growing to 25,000 cases next year in 2016. The year following, 90,000 cases, which is about 7,500 a month average. In 2018, we grow to 200,000 cases, and by 2019, 350,000 cases a year, which is about 29,000 cases a month on average. To put things in perspective, sales of premium and luxury vodka in the United States alone were over 26 million cases in 2013, according to Just Drinks and the IWSR. And to clarify, when we talk about a case, we're talking about 12 750 milliliter bottles, also known as a 9-liter in the trade. So looking at the sales revenue on this chart, we can see we've got about $500,000 of revenue in 2015, growing to about $3.6 million the following year, $13 million, $29 million, and just over $51 million. EBITDA, which is earnings before interest, taxes, depreciation, and amortization, will have a negative $583,000 this first year, $190,000 the following year. We've closed the gap quite a bit there. Breaking through to the positive in 2017 at $1.7 million, almost $1.8 million, $6.9 million the following, and $15.2 million in 2019. Putting the interest, the taxes, the depreciation, and amortization back in, we get net income. We have a loss of about 690, call it a loss of almost 700,000 this year. The loss in 2016 is about negative 528,000. We break through to the positive on net income in 2017 with a 1.6 million, 6.8 the following year, and $15 million in 2019. Cash flow lags income, which is customary of the spirits industries that need to invest heavily in inventories and finance accounts receivable of the distributors we sell to. We're assuming 45-day terms to those distributors. So in the first year, we expect a cash flow from operation deficit to be about $750,000, increasing to $900,000 the following year, and growing to almost $1.3 million in 2017 due to acquisition of inventory, building inventories, and financing accounts receivable of our distributors. In 2018, we popped to the positive, a full year behind the point that we become net income positive of about $3.9 million and $13 million by 2019. Because this is an LLC, a limited liability company, it's a flow-through tax entity, meaning the owners become responsible for the tax obligations, so the Jackpot will be making tax distributions to pay for those taxes. And the first year we'll need to do that, according to the model, is in 2018 to the tune of about $800,000, growing to $3.1 million the following year. Mark's going to address potential exit strategies in a moment, but assuming that none of the exit strategies are employed, our $1.5 million model projects that $1 million of profit distribution could be made in 2018 and another $4 million the following year in 2019. Now I'd like to turn our attention to the use of proceeds. Of the $1.5 million, we would use about $375,000 of it to purchase vodka, packaging, transportation. It also includes excise taxes. We would use $330,000 for sales and marketing efforts, which includes brokers, advertising, travel. We'd use about $480,000 for brand promotion, which is collateral materials, the cutesy things that you see in bars and trade shows, the trade shows themselves, and brand development. And lastly, we would need about $165,000 for salaries, warehousing, office rent, accounting staff, and the fees that we will be paying for proprietary voucher redemption in our system. Mark, back to you.
Thank you very much, Paul. Much appreciated. We've identified a couple of exit strategies. The first scenario would be acquisition with a sale to a global beverage producer. The second scenario would be to give cash distributions to our investors through the profitable growth of national expansion, multiple spirit and beverage categories, as well as multiple casino partners, including online gaming and possible international casino opportunities. Why invest in us? Well, we're 3 years in the making and very scalable. Jackpot's proprietary redemption credit model enables its partners to drive desirable consumers to their physical locations and engage in their most profitable product, gaming. Our spirits are world-class, and we deliver demonstrable value to all parties: the consumers who enjoy gaming-related activities, the retailers who will be selling Jackpot on their shelves, and the casino partners that we will be aligning with. Jackpot's experienced management team has a solid history of successful execution, and our model is unique, first to market, and solidly protected. To summarize, our capital raise is $1.5 million. Our terms are convertible notes with a $5,000 minimum investment. We have a 10% interest rate on that, as well as a 20% conversion discount. The opportunity is to 200 million consumers in a $100 billion market. And our exit strategies are a sale to a global beverage producer or to have cash distributions to our members. We are very excited about the opportunity Jackpot Spirits is bringing to market. We invite you to be a part of this innovative and unique company and to help us make our dreams come to life. To that end, we're offering investments for as little as $5,000 to include as many Jackpot Spirits friends as possible. All of the detailed information can be found in our private placement document on the Breakaway Funding website. We encourage you to review and ask questions. Also, each member of the Jackpot team will receive a case of Jackpot vodka a year. And remember, with Jackpot Spirits, you're always a winner. Kim?
Thank you, Mark. Super, super fun, great presentation. Very, very excited to read all of the details about your expansion plan and the opportunity, your future opportunities. At this time, we are going to open up the lines, so to speak, for questions. As a reminder, if you have a question, please type it into the control panel in the lower right-hand side of your screen, and David Perticone will take them in the order they are received. So, David, I will turn it to you, and we can start with our questions.
Okay, thank you, Kim, Mark, and Paul. We have a few questions already coming in here. This is for Mark. Bill wants to know, can you combine your rewards, or is it one per visit?
That's a good question. Right now, each redemption is good in a 24-hour period. Obviously, you can build up as many as you want. You can keep a bank, so to speak, with your credits, but you may use one every 24 hours. So if you're going down for 3 days, you've got some friends with you, obviously you could have up to $100 a day if there's 4 of you, and you can use that as many times as you would like.
Interesting. Thanks, Mark. Mark, I have another question here for you. Jenna wants to know, what are your plans to make other spirits, and if so, do you have a timetable for that?
There are other plans to make spirits. Obviously, some of the other most popular spirits right now are whiskey, bourbon, rye, but right now we're doing a vertical with the vodka because it's such a large market.
Okay, and we have another one here from Jared. Jared wants to know, are there any other states that Jackpot has been allowed to sell in with a redemption offer from a casino within that state?
Yes, actually we've just been speaking with a couple states. One of them is Florida, and I mentioned Florida because Florida has 8 casinos. They're all Hard Rock casinos. We have been given permission from the Gaming Commission in Florida to work with them. So that's one of the opportunities that we will have. Obviously, Nevada is another one. And just recently, we received a letter from the Department of Justice in Sacramento allowing us to have Indian reservation casinos in California highlighted on our bottles, which could be a huge opportunity for us as well.
Nice. And we have one more question here, Mark. Who makes the product? Is it local or regional? Does it matter? Asking because of shipping costs.
That's a great question. Our partner, Scott Schiller, Scott and I were tasting through several different vodkas, and we found a distiller on Treasure Island in the middle of the San Francisco Bay. We had tasted through quite a bit of vodka, and this one really stood out as far as the one we would like to use. It's almost an elegant version for a vodka. We really enjoyed it. So we have a local distiller right here in the middle of the San Francisco Bay.
Oh, that's great. And that's all we have time for as far as questions go. Back to you, Kim. Thanks, Mark.
Thank you, David, and thank you, Mark and Paul, for sharing with us your vision and opportunity at Jackpot Spirits. But before we sign off, a few closing thoughts. Like never before, you have a chance to get in early on opportunities that are meaningful to your portfolio and which have historically been denied you. I personally invite each of you to become part of the ownership culture of Jackpot Spirits and other companies raising capital through Breakaway funding community. It's simple, it's fast, it's free, it's secure, and it is compliant. Sign up today at breakawayfunding.com and take advantage of being an early investor in these incredible investment opportunities. Finally, a plug for our upcoming free educational webinar entitled The 1 Hour Banker, How to Evaluate a Private Equity Investment Like a Professional, presented by James Lachow at Burr, Pilger & Mayer. Thank you again for joining us. Welcome to our investor community, and we look forward to seeing you next time. Good night.